I believe that most of you have probably actually attended a couple of the webinars before. This is, of course, part 3 in our 3-part series. And this is meant to be essentially, like I said, that advanced class for users of Superior Profits Q Global. Without too much further ado here, I want to actually just go ahead and get on into it with Sagar. Sagar, are you there?
Yes, can you hear me?
Yes, I can hear you perfect. Let me go ahead and make you the presenter here, and you should be able to also see any questions that arise in that questions box in your little GoToWebinar.
Okay, great.
Toolbox.
Everybody can see my screen and hear me. You should be seeing the Superior Profit homepage.
Yes, we can see it. And one thing I did mean to mention, people attending this webinar, this is supposed to be a very private session customized for users. So please, if you have any questions at any time, feel free to type them into the questions box, and we'll be here to go over it with you.
Thanks, Hunter. Thanks to Metastock also for making this webinar possible for all of us. It is customary for the presenter to say a few words, so let me do that. I am Sagar Nandi, Chief Analyst and Trader at Superior Profit registered company in Singapore. That's about it for me. If you would like to know more, you can always go to our homepage in the About menu. You can know about the company, myself, and more importantly, about key tenets of trading in Superior Profit way. I will not take more time on that. Instead, I will go right into the topics of today. Now, this is the 3rd webinar in a series of 3 webinars. This is aimed to be interactive. And interactive means 2 things. One, you can ask questions along the way. I will try to answer to the best of the time available. But it is also the other way. I will be asking questions. Hopefully, you have gone through webinar 1 and webinar 2. If you didn't, you might have looked at the videos in Metastock YouTube channel. Based on that, you can try to answer in the chat box, and we will clarify all the concepts of Superior Profit way in today's webinar, putting in practice everything that we learned in the last 2 sessions. Let me go through the standard disclaimer. This demonstration is for educational purposes only. It is designed to share information on Superior Profits trading system. The information presented here should only be used by people who are aware of the risk inherent in trading. Past performance is no guarantee of future return. Superior Profit is not an investment advisor. This is not a recommendation for buying or selling stock or any other instrument. Superior Profit will have no liability for any investment decision made by its audience. Let us now quickly recap what we covered in webinar 1 and webinar 2. In webinar 1, we explained what is Superior Profit way. It's a way to make consistent profit trading profitably multiple instruments, stock, options, Forex, futures, ETFs, in global markets in almost any country in the world, using different styles, long-term investment, swing trading, or day trading, by combining technical analysis using Q system with fundamental analysis from Zenith, or you may use other resources, with broad market analysis, sector, and industry analysis, all combined in a visual manner that is easy to follow, be it by a high school graduate or a septuagenarian experienced investor. We have put together significant educational material on Superior Profit way and trading system. So we looked at the videos, books, blogs, and the suggested study sequence for them. Then we had looked at the community trade ideas that are shared by me regularly as well as by global traders into the graduates club. We also use quiz to enhance and sharpen our trading skill. We looked at some of them also. All these, the Q system, superior profit way, the community, are aimed at making ourselves more disciplined trader. And this discipline is further reinforced by weekly live classes that we conduct, where we look at live market analysis, sector industry analysis, as well as look for potential trades for the upcoming days. These classes are open to public, though it is meant for use by Q traders. Anybody can register from the education menu in our homepage and go into live class. What did we cover in webinar 2? Webinar 2 was aimed specifically at explaining swing trading superior profit way. We defined swing trading, then we looked at the key characteristics of successful swing traders. We used Q indicators for swing trading, different kinds of indicators, including support resistance levels like memory lines, watermark level, quarterly or yearly pivots, trending indicators like movement, direction lines, etc., and reversing indicators, which included headwind signal, bear release, bull release signal, etc. All the indicators were by design looking different, and they are non-overlapping. So we put together a number of indicators that were necessary and only necessary to understand how the market was acting. Then we broke down the entire market movement of an instrument into 4 distinct conditions: trending, reversing, sideways, or exhausting, and designed a trading way, swing trading way, only one for each of those market conditions. Go with flow for trending market, headwind for reversing market, bounce for sideways market, box for sideways market, and bounce for exhausting market. And we saw how using market analysis, sector industry, as well as sometimes fundamental analysis puts more edge in favor of our trade. So let us start with today's topics now. We'll build on whatever we studied in webinar 1 and 2 and put it into practice. We'll study key live markets using Q system. This same superior profit way is applied in the trade ideas forum in our traders community, mostly trades shared by me. We will look at how I apply superior profit way in my trade ideas. I am not the only person sharing trades in the community. There are other investors, traders from different countries who share their trades. Those are shared in Graduates Club, invitation only club. There is no fee associated with the club, but it is by invitation only and meant for superior profit serious traders. So we will look at some of the trade ideas shared by these global investors. We'll also look at how we use quiz to apply superior profit way into practice. Finally, if we have time, we will apply top-down technique to find potential trading opportunities in coming days. Top-down technique is something where we start from an outlook of the broad market, sector, industry, and then slowly drill down to the stock level to find trading opportunity. So we'll end today hopefully with some top-down technique application on live market. What about bottom-up approach? Let us touch upon that now. the trades that we saw in webinar 1 and 2, many of them followed bottom-up approach. And let me start from now to ask questions to cement our understanding of the topics that we covered in webinar 1 and 2. In bottom-up approach, first we create a watch list. So somebody may have a watch list, for example, in USA market of liquid stocks. The first step in bottom-up approach is to filter from that watch list, maybe 100 stocks, shortlist potential trades, maybe trend following, go with flow, or headwind trade. So my question now is, how do we filter from our watch list to a smaller short list to find swing trades? Could you type your answer in the chat box? How, using which meta stock or Q instrument or Q technique or Q module, you can filter down from the whole watch list to a few candidate stocks. We do that using Metastock Explorer. Let me start up Metastock. 1 minute. While it is loading, let me continue to the next point. After we create a short list of candidate stocks, we use Q templates to identify swing trade entries. So the question again is, which Q template, ready-made template, do we use to hop onto a trade or enter a swing trade? We use the template which is named as hop on template. In hop on template, we know where to enter a swing trade and where to exit swing trade with profit at the initial profit target level, and we use a different template to identify the stop level. What is that template? That template is called hop off template. So in that way, we have created one ready-made template for each logical step in our trading life. One for hopping onto a trade, one for hopping off a trade, and there are other templates for day trading and also yet other templates for trading options, etc. The next step in bottom-up approach, once we identify a candidate stock to enter and we evaluate the reward risk is acceptable, the next step is to align the trade with our outlook on the market, sector, as well as industry. We do that visually by using the information in superior profit side. If you go to home, there are drop-down menus. In broad market, we can see what is our outlook on the broad market, not a subjective outlook, but based on the movement of the indices. On the left hand side is the Nasdaq weekly chart, on the right hand side is the NYSE weekly chart, both of composite indices. And then in the lower panels we have market internals, the new high lows being made, advancing issues minus declining issues, as well as up volume minus down volume. By looking at the internals relative to how the indices are moving, we can see whether firstly the indices are bullish or not, and secondly whether the internals are conforming to that bullish mode or not. And we update this view every week. Current view is indices bullish, both NYSE and Nasdaq, but the internals remain weak. To visually check the industry and sector, we use the heat map for the 10 broad sectors, Thomson Reuters classification, and then a much deeper classification of 160 industry groups. And we can use the heat map to see whether the stock that we are thinking of going long, is it strong relative to other industry groups or not. So for example, as of last weekend, we can see forestry and paper is ranking 1. That is relative to all the other 159 industry groups, forestry and paper was strongest. So if we found using sonar and Q charts a long opportunity in a stock that belongs to this industry group, we may be happier to take that. The other way of using the industry group ranking is to look for industries like coal, which was weak. Magenta color signifies weak and cyan color signifies strong, which is also seen from the numbering, but we can just look at the color in a visual way and respond to it. So if we find an industry which was weak 2 months ago, 1 month ago, but turning strong 10 days ago and 5 days ago, this is as of last weekend, then we might look for long opportunities in that industry, coal in this case, maybe about 10 days before, or maybe about 5 days before, as of last weekend. Since then, the data might have changed. We update this data on a weekly basis, but we can also use Zenith to look at the latest status. And later on, when we do top-down technique to find potential trades, we will use Zenith to look for which are the industry groups strongest as of today and which are the ones looking weaker as of today. Okay, it's taking some time, maybe because of my networking. Just give me a minute, please. Okay, coming back. So in bottom-up approach, in summary, then we start with our watch list, filter from that watch list using Explorer, which is sonar in Q, look at those smaller list of stocks using Q templates, hop on template and then hop off template to identify target and stop. Once we have a good reward risk ratio, we then look up the market sector industry to have more edges in our trades favor. All of these are done visually. We have seen examples of bottom-up technique being applied earlier, and we'll see more of those trades today. For now, let us apply superior profit way to live markets. We can look at S&P 500 first. And we will look at it through at a glance template, where we use weekly chart using backdrop template on the left hand side and daily chart on the right hand side using hop on template. This copper line, zigzag line, is relative performance, which measures the instrument's strength relative to broad market. For US market, I have set the benchmark to be S&P 500 itself. So this line is not relevant to studying S&P 500 itself. I am deleting it. Now, for swing trading, let us focus on swing trading in this session also, like in the last class. For swing trading, we are interested in intermediate trend of the instrument so that we can capitalize from a swing trade that spans few days to few weeks, mostly ending closing the trade within 5 days or so for our swing trades. Now on the weekly chart, we can see that for several weeks it was moving sideways. Then it broke out of the range, it broke out of the watermark high level last week, but then came back inside the watermark level as of last week, as of this week. And the same pattern is playing out in the daily chart. We had a bearish headwind signal here on 14th December. Since then, price struggled to go out, finally breaking out on 25th January, more than a 1 month later, and then again came back inside the watermark level. So this is a sidewise moving S&P 500, and when broad market index or future like S&P 500 moves sideways, several industry groups and many stocks will also follow suit. And this is an environment where it is not easy to take directional trades. If one takes directional swing trade, they may be stopped out. And we will see that the way the Q system is designed, the use of weekly and daily chart together, the use of the support resistance lines, the use of the unambiguous checklist, which allows us to take a trade or prevents us from taking a trade, will mostly keep us out of harm by not giving us any stock which is a good candidate under such environment. So we will try to find some trades, and we may see that for many of the stocks, for some reason or other, we are not allowed to take a trade. Does it mean we have no trades at all in today's market? We definitely have, and those are being shared in the traders community, and we will look at them also. Now this is a technical view of S&P 500, but we don't use only technical view. In our forum, we look at the market in a more holistic manner. On a weekly basis and from time to time, we publish our outlook on S&P 500 based on several criteria. This is the outlook that was posted based on 29th January, just a few days ago. This is the weekend update, and therefore it is more detailed. Our outlook at that time was neutral based on broad market analysis, where the indices were bullish but the internals were weak. We looked at this chart earlier at our site. Then we look at sector analysis, and when we saw at the graph that shows sector performance in last 5 days and previous 5 days, we saw there were many flip-flops. For example, utilities were positive 1 week ago, but it turned negative. Telecom was positive earlier, turned negative. Technology was slightly positive, became much more positive. Non-cyclical was positive, turned negative. Industrial was negative, turned positive. Healthcare was positive, turned negative. Healthcare negative, turned positive. Financial also negative, turned positive. Energy, we see many flip-flops switching from one side to other side, and only few trending like basic material was positive, became more positive, and technology. Only two probably I can see which were trending in the same direction for 5 days and the 5 days prior that. This is showing that the big investors are not probably in the market in a directional manner. So the flow traders may be just moving in and out of different sectors. We then drill down to the industry analysis and looked at 5 days best performing industries. Forestry paper was the strongest, we saw from the heat ranking also earlier. But when we compare this with the report that we posted 1 week earlier, we also saw significant number of flip-flops in the industry groups. We saw that both in the best performing industries and the worst performing industries, and also the industries that had biggest rank improvement and the biggest rank declines. Based on all these studies, we concluded at the end of 29 January that the outlook on S&P 500 was neutral, which we could see from a technical perspective from the at a glance view of S&P 500. Now, since that day, our market outlook on S&P 500 might have changed, and in the Signals forum, those updates are shared, probably more from a technical perspective and sometimes adding industry sector fundamental data if it is relevant. We update the outlook at the end of every day if there is any change in the Signals forum. So that was a live analysis of S&P 500, in this case futures, using at a glance template. Let us look at some Forex instrument now. I am resident of Singapore and I tend to keep an eye on the Singapore dollar. So let's look at Singapore dollar, and let me use the hop on template. Focus on the daily chart for a moment. There is a template called hop on where most of the signals for trend following trade, all the signals for trend following trade, go with flow trade can be found. And there is another one, hop on advanced, where we have all the indicators not only for trend following but for bounce, headwind, as well as box trend. So it has a few more signals. If you know what trade you are looking for, if you are looking for only trend following, you may simply use the hop on template. If you are looking for any potential trade, trend following, reversing, sideways, etc., then you can use the hop on advanced template. It just has few more signals in it. So let me open SGD using the hop on advanced template. Now, as a swing trader, we are interested at the right edge of the chart, not in the middle of the chart, where by looking back we could say, wow, we could have a long trade here, which we could really have, because we can see a cyan candle, that is the flow color bullish in the daily chart, which is a signal for entering trend following long trade. So we can see we could enter on 29th September. We could also take a long trade on 9th November 2016 on Singapore dollar. But let us look at live market. At the right edge of the chart, is there a trade? To answer that, we have three-step process. For stocks, for Forex, we may have a two-step process. First step process is, what market condition is Sing dollar in? Is it a trending market, sideways market, or exhausting market, or reversing market? If I ask that question, could you answer in the chat box? By looking at the right side of the chart, what do we see? Is it in a trending market or sideways market? For the purpose of swing trading. It is in a trending market and the trend is downward. Why we know it is in a trending market? Because it is falling down, price is remaining between the middle of the two boundary lines and the lower boundary line. So it is not only trending, but it is trending down, and we can also see by successive lower high and lower lows. So once we answer this first question, which condition the market is in, it is trending and it is downtrending, whether we have a trade setup or not is very simple to find out. All we have to ask ourselves is there a go with flow trade setup available in this chart on the last day? And the immediate answer is no, because go with flow setup requires a magenta candle to take a short trade, bearish trade. And that we can find in the unambiguous checklist. For each of the trade setups, we have only 4 trade setups, one for each of the market conditions. We covered it in the last swing trading class, but let's look at the checklist quickly. For go with flow trade, This is for long trade. So for short trade, we'll have to reverse all the conditions. We have one requirement, the second one, the flow candle color turns bullish, cyan. So for bearish trade, it should turn bearish or magenta. Coming back to MetaStock on the hop-on template, we don't have a magenta candle on the last day of the chart. So it is as easy as that, deciding that we are not going to take a trade. Again, first two steps, one step, ask ourselves which state the market is in. It's trending and downtrending. So what we are looking for, only one trade setup is applicable to trending market, that is go with flow. Do we have a go with flow setup on the last bar? No, because the candle is not magenta. We don't need to go through even the entire checklist. One checklist condition is not met, we ignore the bar and wait for a more opportune moment. So then let me ask that we are active traders, swing traders in superior profit. So if we are not looking for a trade today, could we look for a trade one of the recent days? So in other words, if I look inside the chart from the right edge, the question now is, how many candles before today could we find a superior profit swing trade, and what was the setup? Again, you can feel free to use the chat box. What we will be looking for is a trend following trade, and it is downtrending, so we'll be looking for a go with flow short trade. And we see that we had a magenta candle 1 to 3 days ago, so that will be our potential go with flow short entry. So let me apply the checklist and see how unambiguously we could decide on that. After few days of using Q system, you don't need to look at the checklist, just like I don't need anymore. All our traders in community, they can actually look at a chart, and in less than 1 minute, usually even in 10 seconds, they can tell whether there is a trade or not, just like we decided on the last candle. But let us look on the bar 30th January 2017 and see how the checklist helped us to decide to take a trade or not. And it has to be a trend following trade. So what are the requirements? It is for long trade listed here. So for short trade, I will reverse in mind. Identify the trend, lower high and lower low in candle chart. Also check that the current candle is bearish, solid, or with upper tail. So we had lower high and lower low with the Singapore dollar falling. We had a bearish candle because it is solid. The next condition in the checklist is wait for price to come up to the top of swing and till down. Flow candle color should turn bearish or magenta. So we indeed let Singapore dollar come up for 2 days and let it till down with a bearish flow color flow, that is magenta color candle on that day. So the second checklist is met. Third checklist, see that the stock, this is relevant to stock, where we want to see that the stock is going down for bearish trend faster than broad market. But this is Forex, it's already a pair, so let's ignore that requirement for Forex. The fourth condition is see that reward risk is acceptable, target is acceptable relative to the stop. So our target will be the lower boundary line, or at least the risk distance, and our stop will be just above the recent high. So just by visually looking at it, we can see that the potential reward was more than the potential risk, so that requirement was also met. Those are all the requirements on daily chart hop on template, and there is a requirement on weekly chart. We want weekly also to be aligned with the trade, thereby applying more tailwind to our trade, and the weekly candle backdrop color has to be bearish or magenta. The weekly candle might have changed because we are looking at a past date, but we can look at the backdrop template, and I have set up MetaStock in a way that all the key templates are on my menu. You can do that by right clicking and custom toolbar properties, and you can add the templates that you use most frequently to the toolbar. So I have done that, and everything I need is actually on the toolbar now. So I can click on number 1 and it will go to the backdrop template. Okay, I'm trying to see if there are questions. Maybe I'm not able to see the questions or answers posted by audience.
So it should be in the in your GoToMeeting toolbar. There should be a questions tab.
I can see one webcam tab, audio, and attendees tab. I don't have a Q&A tab. I have the attendees tab.
Let me see here. Let me try this.
Yes, I have the question tab now.
Okay, perfect.
Thanks, Hunter. Let me just drag it and make it bigger. I don't need the chat for now. Just give me a minute. Let me try to expand the answers. The Q&A panel. Great. Thanks for the answer. Sorry, I was not able to look at it. But coming back to our Singapore dollar example, the only requirement we had on weekly chart for short-term swing trade is the weekly candle backdrop color is bearish, that is magenta. And it takes 1 second to see, yes, it was magenta. So if we were looking at it on 30th January, we have an unambiguous checklist-based short trading signal on Sing dollar. We could book profit, wait for it to hit lower boundary, but what our traders do once the risk distance is covered, they take some money off the table and let profit run on the rest of the position. So within 1 day, they would have booked profit and moved the stop to probably break even, but they might have kept it at the original position depending on how much profit they are booking. If they are booking half profit, maybe they need to move stop to break even position. If they are booking 2/3 of the position, then they can leave the stop at the original position and still have a guaranteed profitable trade. So in either way, we could easily find a profitable and low risk swing trade. Now, the other question is, how did we know on this day, 30th Jan, we had a short swing trade, go with flow opportunity? One way is some of us look at a list of symbols on a regular basis. Because I trade stock in Singapore market, I look at Singapore dollar anyway on a daily basis. Not every minute basis, but at the end of the day. But if we have a bigger instrument list, I was trying to show you earlier, we have a number of explorers, Q explorers, and we have one for go with flow long, trend following long, one for go with flow short. We could simply run them to find potential trade opportunities. Remember, that is the beginning of a bottom-up approach. So we could see that we had a profitable trade initiated 1 to 3 days ago on Sing dollar, and we have already booked profit if we are trading Singapore dollar as a swing trade instrument. So we looked at S&P 500 using live market. We looked at Sing dollar. Let's look at some futures now. If you attended live class, the webinar last time, or you had looked at the YouTube recording, you know that we had shared a posting in our community catching the almost the very bottom of gold. And how did we do that? Let's recap it. We'll change to GC1, the gold future, and we like to use the same template, so use chart as template. No, not this one, sorry. It should be gold future. That chart should look different. It should be GCC1. By the way, in our weekly live class, we don't use any presentation. It helps me that way. I don't have to spend time creating presentations and I can focus on live charts. Okay, so we had actually caught the bottom of gold, I think around 29th December, and it was posted in the traders community. How did we do that? We used the yearly and quarterly pivots. So we have not put all the indicators together because usually we don't need the yearly quarterly pivot support resistance levels, but gold was going down heavily and then stopped going down and started to go up, and at that time I had opened up the yearly quarterly pivot levels and I saw, let me remove the quarterly pivot levels for a minute. We saw, if we now look back for 1 year, okay, this is the beginning of 2016. I will draw a vertical line. This is the beginning of 2016. Once it began the year, gold rallied. It went above the yearly pivot, that is the center line, hit the resistance 1, resistance 2, almost reached resistance 3. So on both sides of yearly pivot, we have R1, R2, R3 on the upper side and S1, S2, S3, support 1, 2, 3 on the lower side. So it rallied in the beginning of 2016, almost hit the third resistance line and started going down. If we are following the last two webinars, we know that when it started to go down with lower high, lower low, we would have very profitable swing trade opportunities at these peak points. Not as it was going up, but remember, in swing trade, go with flow short, we let it go up till down with a magenta candle, and I'm sure those would have come if we switch on to the hop on template. But let us look at the yearly pivot now in the context of longer range. It fell down and then I noticed it went below the yearly pivot and immediately went back up. The same pattern was playing out in GLD, the gold ETF. And sometimes the gold ETF is good to have and keep an eye on, because the activity pattern of GLD is sometimes more representative than the future, because the futures expire. There you can see there are activity spikes. Usually you will notice at the end of the month. So they distort the activity picture somewhat. But if we had looked at GLD, there will not be any expiry and there will not be such spikes at the end of the month. And we'll notice that probably the activity was also telling, along with the instrument move, that gold was hesitating to go down anymore. What it constituted is what we call in superior profit way a fake downside breakout, by stopping out weak hands and going back right inside the yearly pivot level. What we always do in superior profit way is to look for low risk trade. So this was a very low risk trade for us with a very narrow stop loss, and we could take initial profit once the risk distance was covered, or if it hit some resistance level like the new yearly pivot. This is the beginning of the new year, so the yearly pivot levels have been redrawn. You can see we could book some profit at the yearly pivot level. We also provide a gold signal in our forum, and currently the signal, we have a neutral was as of last week, that might have changed, but on gold we have a bullish signal. There was a post in the forum catching the bottom of gold, but we also had used subsequent charts to further strengthen the bullish call. So we had caught the bottom of gold, and when it had gapped up around this time, that is around 5th January, we had reinforced the bullish call on gold, and the bullish call is still valid. So we had studied this in the last session also. Let us look at some agriculture commodity and analyze it using live chart. By the way, we can see on the right edge that gold tried to come down, made a higher low, then went up, stopped right at the memory resistance level. And one day before, after that, it tried to come down but ended with a long lower tail that is bullish. And overnight market is in progress now. That price level has now broken the resistance memory. So if it goes up, it will be a kind of go with flow long trading signal, which had come actually on 31st Jan. If we ran Q go with flow long, we would have identified GLD on that day, or gold futures, but we would not enter the trade because of the existence of the memory resistance. Using intraday chart, fine-tune real-time chart, we might have actually taken a trade right at the bottom of this long tail as it hit the 2-3 direction lines, or we could initiate as it went above the memory resistance today. We can keep an eye on gold. We have a bullish call on that. But let's now look at the agriculture commodity. Let's choose soybean. And if you don't know the symbol in Metastock, because Metastock data comes from Thomson Reuters, there are lots of instruments from all over the world, all exchanges, all markets, stocks, futures, commodities, everything. So you can just type the name. So of course we are looking for soybean, and there will be, we can search all public symbols. There will be a lot of symbols, different expiries. I know the symbol actually, it's SC1. So let me just scroll down. S for soybean, C for continuous, and 1 for front month. I think that's how the nomenclature goes. So we will look at soybean SC1, and we can look at it through the hop on advanced template. And happy that we have the Q&A panel with me in the other terminal, so I can ask questions to make it more interactive and hopefully fun. So let's look at soybean. Again, the first question we are going to ask, what market condition the stock is in this case the commodity is in, agriculture commodity, and we are talking about swing trade, so we are interested in the near vicinity of the right side edge, not on the left edge. I have seen some people start with the left edge for swing trading. It doesn't matter so much what happened 6 months ago. We need to see a couple of weeks ago probably, or maybe 1 month or 2 months ago. So looking at the right side of the chart, first question we are, remember 3-step process. First step, what market condition? Please type your answer. It is not so straightforward in this case, not so straightforward. If we look at just a few days since the last high, it is coming down, but that is not how trend is defined for swing trading, at least not in superior profit way. This downfall could be used for day trading, but for swing trading we are looking across the swings. We are looking across the swings. Let me try to draw it. Yeah, this is beautiful thing I can draw actually. So for swing trading, we are looking across swings and asking the question, do we have an uptrend? How do we know we have an uptrend? We need to have higher high and higher low. The existence of the ascending memory line, support memory line, also says that it is in an uptrend. In a longer time frame, you know, the memory trend lines are very smart automatic trend lines that can come far away from the past. So there is a memory resistance coming from far away from the past, but looking at the swings, we know we have higher high and we have higher low. So it is in a uptrend right now. It is in uptrend. So it is a trending market looking from actually from this time, we have higher high, higher low. So once we have answered that question, what market condition it is in, the next easy question to ask, do we have a go with flow long setup at the right edge of the chart? You can type your answer. Let's see how fast you can answer. Do we have a go with flow long? No. Yes. You know what I love about the superior profit way and the Q charts, Mr. Tim. Let me see, is the full name or not? Yes, Mr. Tim. I don't know the full name, sorry about that. But there is no trade, and how do we decide that? Because go with flow long trade must have a cyan candle color. Because there is no cyan candle color, we know there is no long trade. However, we can anticipate a trade. We can anticipate a trade if tomorrow maybe it turns cyan in the daily chart, we'll have a low risk go with flow long opportunity. We will put the stop loss right below the recent low and try to book profit at the upper boundary or as soon as the risk distance is covered. We also have a bull release signal, but that is a fast signal, and we use it only for sideways market, and we use it extensively in day trading because it's a fast signal. By the way, for day trading, all the signals we used have zero lag or virtually zero lag. Whereas for swing trading, if we try to use zero lag indicators all the time, we will be whipsawed. We'll be entering a trade, immediately stopped out. So by necessity, swing trade indicators need to be different, in my view, from that of day trading. That's why our day trading templates are totally different. So that was an analysis of an agriculture commodity, soybean, and you may add fundamental data also to it. Zenith has a lot of information on all the commodities. You can see, for example, Brazil is one of the biggest exporter of soybean, and you can track how the harvesting is going on. It is actually record harvesting, and they are planning to export almost double the quantity they exported last year. There was some concern that raining may interrupt harvesting, but that has not materialized. Now that will seem to say, okay, harvesting is so good, exporting so good, price will go down. That may be a hypothesis, but in superior profit way, we trade what we see. So if we see that it is in uptrend, it's a slow uptrend actually. It's not a very strong uptrend, but it is in slow uptrend, supported by this beautiful memory line coming from way back. So if we get a long opportunity go with flow, we'll take it with low risk. It could be traded with futures, it could be traded with ETF that is tracking soybean, or we could even use options on futures. I will be happier if soybean came down to the memory support level around 990, 995 and then tilted up. So that would give us a go with flow signal with also support from memory, and probably it would have been a bounce long as well as a go with flow long at the same time. Let me spend one more minute on this chart explaining why I said it is not so strong uptrend. If you see on the left hand side, I will say in superior profit way it is in strong downtrend, because in strong downtrend the instrument will tend to be inside the middle of the two boundary lines, we call it value area, and the lower boundary. It will usually not go to the upper boundary level. Similarly, in a strong uptrend, a stock is expected to remain inside the value area, the middle of the two boundary line, and hit the upper boundary lines at the top of the swings. In this case, it is hitting the top of the swing, the upper boundary line, but it is also coming down below value area. It is still in uptrend, supported by memory support, but it is not so strong. But that doesn't prevent us from taking a go with flow long trade, so long as it is a low risk trade. Again, I will be happier if it came down to memory support and tilt up from there. So we looked at S&P 500 US market, we looked at gold, we looked at agriculture future, live market analysis. Let's look at a non-US market index future. Let's look at India market. They have a future on the broad market index. It's called Nifty index, and the future is Nifty futures. We can look at it again at the hop on advanced template. Again, for swing trading, we are focusing on the right side of the chart. So again, the same question, the three-step process. First step, what is the market condition at the right side of the chart? You may type your answer, please. In my MBA class, I did Executive MBA from Singapore. Our professors used to say those who participate most, however embarrassing that may be, and it was embarrassing for me to try to answer those difficult questions sometimes. Sometimes, not all the time. But he said that all the professors said those who participate most will benefit most. We paid the same fee anyway. So you are spending time in this session anyway, so you may as well try to answer whether I agree with that or not based on superior profit way. Doesn't matter. We'll cement our understanding, and that is the purpose of this class. So coming back to the question, at the right side of the chart, what is the market condition? Is it trending, reversing, exhausting, or sideways? Yes, trend is up. So it is in uptrending market. So the first question, how we make trading easy and simple is ask a series of questions one by one. And for each of them, we can answer very quickly and then stitch the answers together to come to a conclusion. So first question is, what state the market is in? It's trending. Which trend? It's uptrend. The next question, now we have to look at the right edge of the chart, the last candle. What we have to ask, is there a trending setup, and which should be only superior profit way, that is a go with flow. In superior profit way, there is only one setup for each market condition. So the question is there a go with flow long setup? And the answer by now will be no, there is not, because we will need a cyan candle color. We have a green traffic light candle color, but that is not an optimal entry point. The optimal entry point in uptrend will be the cyan candles, provided we have good reward risk ratio. Because there is no cyan candle on the last day, we are not going to take any go with flow long trend. Now another question I could ask, and you may review some of these charts and ask yourself that question. Whenever you open a stock using go with flow template, you ask if there is no trade on the right hand side, looking back inside, when you would have taken a trade, one of those go with flow, headwind, bounce, etc. looking back, and that way practicing will help you to trade at the right side of the market when you have a signal. Now we can see here, if I try to answer that question, we can see that there was no easy go with flow long trade to be taken. There was a flow candle color cyan here. However, that was too close to upper boundary. Upper boundary is our initial profit target for swing trade. After the fact, it has gone up, but that doesn't matter. We don't have any future teller, fortune teller, or crystal ball. So looking at this candle, though it is a flow color cyan, meaning it is an optimal point, the stock is in uptrend, tilted down and go up. However, it was too close to upper boundary, so we will not use that signal, because that will also not meet our checklist. In the go with flow long checklist, we have a requirement that potential reward should be commensurate to potential risk. In this case, our potential reward was too narrow, so we will not take it. Now there was a cyan candle some time ago. However, that time the stock was not in an uptrend, so we will ignore that. For uptrend, we need higher high, higher low, but this low was not higher than the previous low, so it was not an uptrend when we were on this candle. So we will not be able to take a trade. Remember, again, we first ask what condition the market is in. So when we came to this candle, it was not in an uptrending market. So we'll not think about go with flow long trade at all. So looking further back inside the chart, I see a bull release signal accompanied with very high activity, all visually recognized, and I see a fake downside breakout where price tried to go below the watermark low level and immediately went back up inside with extreme high activity, very high activity. Not extreme high, but very high. Extreme high will have a cyan dot. Here we have green dot. So our bounce trade or box trade setup both rely on either very high or extreme high activity and bouncing up either from memory line or watermark level. That was true. So we will have either a box setup in a, we can say, a sideways market, or a bounce setup from memory line. So on this day, right on this day, at the close of the day, we will initiate a trade, swing trade long, with a stop loss just below the recent low, which also happened to be just below the memory support line. This is a very nice support points there. So stop loss will be there. Our initial profit target could be this direction lines. White is very slow and yellow is slow direction line, but the names are not so important. Once we look at the chart, we just respond to them. So that will be our initial target, which will also cover our risk distance. So we would have booked partial profit, maybe half or 3/4 or 2/3 up to the trader style, and use Q protection line to move stop up. So we may still be in the trade by booking half profit, that is eating the cake and having it to let profit run. So when we look at charts in this way, we will see a large percentage of Q trades are successful, enough to make consistent profit in any market condition. In this case, it was a bouncing or sideways market. In case of Sing dollar, it was a short trade in a downtrending market. Go with flow short trade. So whatever be the market condition, we will find trades using the Q charts and the superior profit way. And if we don't find a trade one day, no worry, we just wait for the next day for the appropriate signal to appear. We are not going to enter a trade, therefore, on Nifty, the India index future, as of the last day. Our last trade was some time ago, end of December. And we are still in that trade. If we had taken, some of us book full profit, but some of us let profit run on partial position. If we are letting profit run, we are still in this trade. So we looked at live market, S&P 500, gold, Soybean, Sing dollar, and Nifty from India index. That is how we apply superior profit way and Q charts to live market. And we do it regularly by sharing. Personally, I share trade ideas in the superior profit traders community. So we will not pick and choose. Let's just look at some of the latest posts by me and see how I applied superior profit way. It's not the point whether they made profit or loss. The point is whether we followed the system with discipline. And you will see, if we follow the superior profit way with discipline, many more trades make profit than get stopped out. So we will go to the community, and trade ideas is the forum reserved for superior profit internal traders, mostly me. So let's look at some of the trades. We will not pick and choose, we will just look from the top. So 2 days ago, I had shared America Airline. Let's look at it. And you will see how different aspects of superior profit way come together. On Jan 30, okay, I think the initial chart may be missing, but let's look at it. This was the chart based on which the trade idea was shared. Let's try to draw on this chart. This is a chart of American Airlines, an airlines company. Now this was posted by me, but I had actually posted it after another trader, Nigel from Indonesia, posted a trade idea in Graduates Club on Delta Airlines, DAL. And he had suggested Delta Airlines to be a short trade based on his Q charts analysis. And when I saw the posting, sometimes when I see one potential trade in a company, I look up its peers. So I happened to look up American Airlines, and I found that there is also a Q trade opportunity on American Airlines on this day. What was the setup? And let me explain that. I will go back slightly in the past, and I noticed there was a bearish headwind signal. Remember, that is a reversal signal. The signal doesn't mean in itself that we will short the instrument. We have to go through the checklist. But I noticed when I was on this day, I noticed that there was a bearish headwind signal sometime in December, around December 10, 2016, and American Airlines couldn't breach that top since then. It tried to go down, come up, couldn't breach it, come down, go up. By that time, a memory resistance also formed along with the watermark high level. It tried to go up, but on this day, it came down heavily, and this time with extreme high activity. So that met the requirements of bounce trade as well as box trade. In the last webinar, we covered swing trade, but I didn't have time to go through the checklist for these two trade setups. So let me do that now. And I will have to switch to MetaStock, because when I tab to Explorer, this picture will vanish. So let me open American Airlines using hop on template. By using live data. Okay, it's not AAL. AALO. AALO. O standing for, I think, ordinary shares. Okay. So I was looking on this day, and price fell down heavily. This very strongly bearish candle. Solid candle is bearish. It was also at pendulum high. This thumbs down shows it was at pendulum high. It was at memory resistance. Resistance from memory coming from far back, also another memory coming from recent past, and also at high watermark. So let's look at the requirement for these trade setups. Let's look at the checklist. The checklist you can find. If you don't remember, you can always go to the sitemap, go to swing trading, and the slide is there. Let's look at the checklist for box trade, that is for sideways market. See that this is for long trade, so in my mind I'll reverse the condition. See that the candle is bearish, solid or with higher tail. Yes, candle is solid, so it's bearish, and it also said to see that price is closing below last day's close. Obviously it was true. It was a strongly reversal candle, closed far below last day's close. So the first condition is met for a box trade. Second condition, check that activity was heavy today or last few days. Yes, there was very high activity, extreme high activity. The next checklist, verify price is reversing down from well-established memory line or watermark. Yes, we saw that is true. It was reversing both from memory, which is well-established, as well as watermark. Next is ensure that stretch release bearish signal, cyan or magenta, green will be reversed to red or magenta, down arrow appeared on the chart. Yes, actually the signal is there. We don't see it because the thumbs down is overwriting it. If I go to the decision template, then the overwriting will not happen and we can see a down arrow. That is a bear release signal. It's magenta or red. It is magenta, meaning it is again at pendulum high. Interestingly, when I switch to the decision template, which has the quarterly and yearly pivot, we see that resistance was provided also by the quarterly and yearly pivot. So we had many resistances from memory line, from watermark, as well as long-term pivots. Price tried to go up and heavily came down with high activity. So all these checklists are valid. Traffic light has to be bearish, that is red. Okay, traffic light is red. Traffic light is red. We can see from the ribbon on the top, and magenta means it's not only traffic light red, but it is bearish because of some additional factors. So the candle color flow combines traffic light with other factors to give us an optimal entry point. Mainly for go with flow, but sometimes it helps in other trade. But here the requirement was that traffic light was red, and that was true. Or yellow, but fine, it's already more bearish than neutral. And see, the reward risk is acceptable. So for this trade, our stop will be just above the memory resistance. So that will be our stop. Our target will be the lower boundary. So we thought that the reward risk is acceptable, and I posted the trade in the community. So all the checklist of the box trade was made, and if we go to the bounce trade, it is a similar setup. It's a reversal trade setup like box trade. You can apply the checklist for the box trade on American Airlines on that day. Both box and bounce trade setups will be made. So we had two trade setups valid for this day, and I had posted it in the community. So simply asking the question, what is the market condition, and then using the unambiguous checklist here to see if the Q trade setup for that specific market condition is available. And it was indeed available, and the very next day it hit close enough to the low boundary line. So this was intraday chart, and the trade was closed. Somebody could close partial profit, maybe half or 2/3 or 3/4, but being superior profit trader, when price hits the target, we always book some profit and make the profit risk-free from that point onward. So that is how I applied superior profit way and Q charts onto this trade. Let's look at Google. I discussed it in the last class at length, so I will not go through it again. It was also a long-term buy, and we saw in the last webinar, you can see the recording, the trade made more than 50% profit, and it was found out in a top-down approach. So AAL, how did I come across it? I got the hint from another trader, Nigel, from Indonesia, who posted Delta Airlines. We'll see his trade also. That trade also hit profit target. So I got the cue from him. That way, being part of traders community, I can identify trades, taking a little help from others, what others are looking at. Google, GOGL, it's a marine transportation company. How I found it? I found it from industry sector analysis, top-down approach. At that time, the marine freight industry group was weak but turning stronger. So I looked at all the stocks in marine freight industry, and this looked promising for long-term buy. By the way, for long-term investment, the industry analysis is very useful. Looking at industries which were weak for a long time and turning strong, we can almost catch the bottom, which we could do for Google, and it gave a 50% profit. But it's not a swing trade, and you can look at the last webinar recording to see more detail of it. I will not go into Google now. And all these trades are also available, accessible. If you go to community trade ideas, you can drill down the trades again. Let's look at long-term investment opportunity, Singapore Bank. It's also long-term. I will not look at it. let's look at CRM and see how I applied superior profit way to this swing trade. When I shared the trade, this is how the at a glance template weekly on the left hand side with backdrop and daily on the right hand side with hop on template look like. And we always encourage all superior profit traders to share the snapshot as they are taking the trade or thinking of the trade, so that we can see exactly what they analyzed. So let's again ask the question. Daily chart is on the right hand side. So looking in the recent past, first question we ask, what is the market condition? Is it trending sideways or something else? You can type your answer, please. It is trending. It is trending, and it is downtrending because it came right from upper boundary to lower boundary, came back to value area, couldn't go higher than that. If it did go back up to 80, we will say it is probably sideways, but it did go only to value area and tilt down with a magenta bearish flow candle at the right hand side, where movement turned red, traffic turned red. And in the weekly, we see the backdrop is magenta. So we have a downtrending market. The only setup that we have to think of is go with flow short, and the requirements are fulfilled. It takes only few seconds because everything is red. It is at value area. The stop will be just above recent high. Target is lower boundary. We have good reward risk ratio. Relative performance tilting down, meaning CRM, Salesforce, the company's name is Salesforce, was going down faster than broad market. The weekly only requirement for go with flow is that the candle color has to be bearish magenta. So the checklist, I remember by heart. You will be able to remember it within few days. So that was valid. So I shared it as a potential trade. This actually I traded with a short call vertical, and in superior profit way, when we trade options, when significant profit is achieved, we book profit. So when stock came here on 29th December, the entry signal was 15th December. In about 15 days, because as a short call, time decay was in our favor and the trade had 50% profit. So in superior profit way, when we have good profit, we start booking profit and make sure the rest of the trade is risk-free. So that was done. Half profit at least was booked, in this case with 50% profit. I used GTC order to exit a trade, and these are the trade entry and exit at that time. The vertical trade, short call vertical, for 8 lots were opened for 72 cents credit on 16th December, and 29th December I exited 4 lots for 35 cents. So less than half of my credit, so 50% profit. And then our rule, the guideline from superior profit, if we have good profit, we make sure the rest doesn't turn into loss. In fact, CRM actually turned back up. So if we didn't follow the discipline of booking profit and putting a protect profit stop on the remaining position, this would have turned into a losing trade. That we don't allow. So following discipline allows us to book profit in this trade. And for swing traders especially, it is important to book profit quickly. As I explained in the last webinar, every swing trade has a welcome period. If it gives us profit in that welcome period, we should take it and make the trade risk-free from that point onwards. Holding on to a swing trade beyond its welcome period often erodes profit, or sometimes it turns the trade into a losing trade. That is not superior profit way. We like to book profit quickly and move on to the next trade. Maybe holding partial position, making sure it is risk-free for the whole trade. Let's look at another example that I shared, Halliburton. then probably I should move on to Graduates Club. When I first shared this instrument, Halliburton HAL, this is how the chart looked like. You can read the post in detail later. On the left hand side, the weekly backdrop, we had a bearish headwind. Price came down with a magenta color, backdrop color, and it was sitting right on top of the memory support. In the right hand chart, daily chart using hop on template, it tried to go up, come down, and it was still resting on the memory support. So what I commented, that because it is resting on memory support, we will not take a trade right now. We need to see that the memory is broken. So that is a way of anticipating a trade but not pulling the trigger unless we have good reward risk ratio and unless it is in confirmed downtrend. It had a nice bearish candle, but it closed right on top of memory support both in weekly and daily. Then in following up, I observe that since 1 minute. Since the original post as of this day, actually the memory support was not broken. So we will not be entering the trade. So this example illustrates that we quickly ask ourselves what market condition it is in and is there a potential trade. Sometimes we may anticipate a trade but don't pull the trigger unless all the checklist conditions are met. And by that way, superior profit way keeps us safe, like in this case. So we didn't enter the trade because it didn't break the memory support line. You may go through the trade ideas, all are open to public, but let's go to some of the trades from Graduates Club. The Graduates Club is an invitation only forum, so the people who are already inside Graduates Club can see each other's trade. I don't post trade there, I post only in the trade ideas. My trades are all open to public, but we decided Graduates Club trades because other global traders are sharing trades. It will be open only to each other, not to public. So once you get invited to Graduates Club, you will have access to the trade. You can learn from others, just like I identified American Airline by looking at Delta posted in Graduates Club. You can do that, and you also share your trade ideas. So let's look at the top few trades from Graduates Club. Then we will spend some time going through the quiz and see how we can see superior profit way put into practice in the quiz, and finally we hopefully will have some time quickly to do a top-down analysis of trades. So let's look at 2-3 examples from Graduates Club. And we will be looking at USA market. The top post, this is the Delta Airlines post posted by Nigel that I mentioned. Let's look at how he applied superior profit way. Okay, for some reason I cannot click here to see the original chart, or maybe I can see or not. Okay, where is the original chart? Okay, for some reason I don't know why I am not able to see the chart. Let me just go to the Metastock platform, Delta Airline, search by symbol, Delta, use chart as template, open it, and let's see, it was posted on 29 January. So this is, sometimes the dates are a bit mixed up because we are in different time zones. So actually the signal was on this day. On this day, and this was a go with flow short signal. We can apply the checklist quickly in our mind. The price was going down with lower high, lower low, tried to go up till down, gave a bearish flow color on 27 January, had a stop just above recent high, which happened to be above the memory resistance target. At the yellow line or at lower boundaries, we had acceptable reward risk ratio. That was what we call the signal day, 27 January. And if we were using real time, many of us use real time data, we will find it using sonar. Simply run sonar on our watch list and it will bring this trade up. We have sonar for checking weekly backdrop also. So we can look for weekly backdrop bearish. We can run this on weekly chart and then further go with flow short on the outcome of backdrop bearish filter, and we would have found Delta Airline as a perfect go with flow short candidate on that day. And the very next day it covered more than the risk distance and we would book at least partial profit, making the trade risk free and then probably holding on to part of it. Now Nigel also mentioned, I think in the post, that the airline industry was weak at that time, and he found it from the, okay, let's keep this intact. He found it from the sector industry ranking. We can just search for airline and you can see what I was mentioning earlier, how we can use the industry ranking to add additional edge to our trade. Airlines was best ranking for a long time, 2, 3, 4, that is 6 months ago, 5, 4 months ago, even 3 months ago. Sand color is strong, that is ranking top in the 160 industry group ranking, then started to turn bearish and more bearish and more bearish, as we can see from the heat map, turning magenta. So when Nigel identified the trend, the industry group was also turning weaker and weaker. So that was in favor of our trade. So the trade could be found using sonar, and then we can look up the industry sector information. That is a bottom-up approach like it was applied in this case. And this trade by Nigel also closed with good profit in few days. And as you can see, our swing trades, when they work, typically they close within 5 days. Average we have seen 5 days. For a longer period, usually it may take few weeks in a sideways moving market, but in a trending market, go with flow is a trending market setup. It usually closes within 5 days, as was in this case. And those who trade options could trade it with option also. So that's up to the preference of the trader. The analysis for option trade and for stock trade is same way in superior profit way. Let's look at few other trades from the graduates club. Let me drink some water, 1 minute. Next trade we can see from the top is NetApp. When it was first shared, this is how the chart looked like. On the left hand side is weekly backdrop bullish, on the right hand side is daily chart using hop on template. It came down and then started to go up. Now I remember when I saw this trade, I noticed that this gap up was due to earnings. So remember, we also keep an eye on some fundamental information, not a lot, but we are aware that this gap up was because of earnings, and we know that when earning gap ups happen and then price comes down, it may try to go up but may fall down again. So I had responded saying that it may be better in superior profit way to wait out wait for a period before trying to take a long trade, because often because after the gap up it came down, it may again try to go up but fall down. So that was my view on the chart, and I later on followed up on that. Actually, it struggled to go up for a while. This was the day when originally the trade was shared, or the chart was shared by a global trader. Then on that day I had mentioned, let us wait for a while to see if the fall from gap up continues, and it did go sideways for a while. Later on this particular day, we had a very low risk go with flow long opportunity. By that day, some days have passed by that time, and we could have taken a low risk entry at that point. If somebody had entered in the time when it was first shared, probably they will get stopped out. If the stop was below this, actually recent low is this. If the stop was below this recent low, then the stop will be far away. I will not take that also. If the stop was just below this, then it will get stopped out. But sometimes if we get stopped out, no issue. When we get a proper signal, we re-enter it. So I had commented not to enter the trade because of some reasons. Broad market was also at all-time high, etc. But anyway, we followed up on the trade. This is how it's not just one directional communication in Graduates Club. Global traders can share their trade ideas and other traders can respond, and from Superior Profit also we often respond to help each other. Let's look at one last trade from Graduates Club, ExxonMobil. Okay, this was posted some time ago also by Nigel. I can see it was posted by Nigel on 23rd January, recent post. And this is how the chart looked at this time. On the left hand side, we see that the candle backdrop color is bearish. On the right hand side, we see a bullish headwind signal. However, the bullish headwind signal is not enough to take a reversal trade. We have a checklist, and the checklist has some requirement. Let's look at the checklist. For headwind trend reversal long trade, the checklist condition, one of them is see that weekly is not contradicting trade direction. Weekly candle backdrop color should be bullish, cyan, or candle shape is to be bullish, that is hollow or with lower tail. So when the chart was posted, immediately I saw that the weekly requirement was not met. Because the weekly requirement was not met, I suggested not to take the just based on the headwind signal, because we need to apply the full checklist. It is unambiguous, just needs few seconds to go through the checklist, and there was no valid queue setup. And I had commented also that at that time the industry, that is the oil commodity industry, was not in uptrend. So we were not taking benefit of the industry being in our trade's favor. Now, whether it went up after that or not, I don't know, but that is not what we aim for. We just want to apply our trade setups based on the market condition with discipline. And by doing that, I didn't see any trade in ExxonMobil at that time. Whether it went up or not after that, it's beside the point. But we can look it up. There is no further follow-up in this trade. Let's look up ExxonMobil since my comment on Jan 24. Again, we are not trying to look at a chart and say, okay, that was a good decision. A decision is good if we followed the system with discipline. And we can keep track how it is doing. We can see that if we follow discipline, superior profit way, and use Q charts, it gives us more profit than it gets stopped out. So let's look at ExxonMobil anyway using hop on chart. I think this was the headwind signal that Nigel originally posted, so 20th Jan, and I suggested not to take it as a headwind trade because the checklist was not made, and in fact it did go down. It did go down. So again, we just followed the rule with discipline. So what I explained, that it is not only for global traders to share with each other from superior profit. We keep an eye, try to keep an eye on what is being shared and try to guide people to the disciplined way of applying Q charts and the unambiguous 4 trade setups. So this would not be a valid headwind trade. A good superior profit trader will not take a long wait for a proper signal. Now on the right hand side, now because we have come here, we can see, is there a good trade setup here? It has broken below the memory support line with high activity. So it is clearly bearish. For bearish trend, for downtrend, only trade that is allowed is go with flow short. We don't have any go with flow short opportunity here. Price is already at lower boundary. That is our profit target for short trade. So we will not be taking a trade when price is already coming to lower boundary. If it goes back up in next few days, we will see if we have a sideways box move. If price goes up, that will also constitute a fake downside breakout. And if we have a low risk entry, we may take a low risk long entry, provided the checklist is met. Right now there is no trade in ExxonMobil. So that were a few trades from Graduates Club. Let me now switch to what is in the slide after this. Quiz playground. Let's see how we post quizzes in the forum for you to sharpen your skill and also to remain disciplined. Again, no pick and choose. Let me just look at some of the latest quizzes and see how superior profit way is put into practice. The first one is about long-term buy. Let me ignore that for now. The quizzes are available to public, so you can go through them. The next is about a swing trade. What is your preferred trade direction in this chart? So I will show you the chart and ask you the question. The first time when the topic was posted, this is how the at a glance chart looked like. Weekly on the left hand side, backdrop template, daily on the right hand side, hop on template. So please type your answer. What will be your preferred direction for any trade? If you take any trade at all, will it be long or short? Bullish or bearish trade? How we answer that? We simple two-step process. First we ask, what is the market condition? Is it trending? If trending, is it downtrending? It will be downtrending. Yes, bearish market. I see some answer. And then the next question is, do we have a trade setup? It does have a magenta flow candle, and if you apply the checklist, you will see most of the go with flow checklist items are met both in weekly and in daily, except that the potential reward is less. The target will be at lower boundary and the stop will be above recent high, so the potential reward will be very smaller compared to potential risk. So we will not take a trade. The quiz asks, if we take a trade at all, what will be our direction? The direction will be bearish. This is PAGP, and why it caught my attention, though we wouldn't trade it, how I came across this is, it was in an oil equipment industry group, oil equipment and services industry group. And okay, let's go through the industry group ranking. That time oil equipment industry group was weak. Oil here, oil equipment and services distribution, this was strong earlier. Cyan color immediately tells us it was turning magenta, so it was becoming weaker. So using top down approach, I was trying to look for potential short opportunity. So that's when PAGP came to my notice. However, we wouldn't trade it because the reward risk requirement was not met. Okay, let me come to the next one, next quiz. Let's look at few quizzes. Would you take any trade in this chart? Let's look at the quiz. And you will see all the quizzes look at the right side of the chart and ask us to make a decision. So this is not Q template, it's a simple bar chart template, and the quiz was just by looking at it, can you decide whether to take a trade or not? And it was just to demonstrate that how putting the Q templates makes the decision much easier. So it was not easy in my mind at least to look at this chart and decide. But if we now apply the Q hop on template on that, the quiz was posted as on this date. On this date, what did we see? We saw that there was a bearish headwind some days ago in the early December 2016. It's a recent post also. And since then, price couldn't violate the top of the bearish headwind signal. By the way, this bearish headwind, just like the other signals, are very effective. We have put together the indicators that are beautiful, very effective, the necessary and only the necessary indicators. There are few of them, but once you learn how to read the color and the signal, you can identify a trade opportunity within a minute, often within 10 seconds. Now, coming back to this chart, I saw that after bearish headwind, price couldn't go up that level for many days, and a memory resistance was formed right on this day. When the quiz was posted, I saw price tried to go up and came down. So it was a fake upside breakout accompanied with high activity. So if we now apply the bounce trade setup, we will see most of the requirements was met except one. What was that? Let's look at the checklist quickly. There is a checklist item that check that this is for long trade. So for short trade, I will reverse it in mine. Check that price is closing below last day's close. Check that price is closing below last day's close for a bounce short trade. Oops, did I close it? So this was the bar, sorry, this was the bar. So the only requirement that was not met on this day is price didn't close below last day's close. So that is another way that superior profit traders can anticipate a trade but don't pull the trigger. So I shared it as a quiz and thinking that I will short it next day if price went below last day's close. Maybe using a stop order, stop entry short order. Could be using the stock. It was on Sprint, actually it was on Sprint Corporation, or we could be using options on Sprint. But it didn't go down, so we would not take the trade. This is yet another example where we can anticipate a trade in our mind, apply the checklist for the relevant market condition, but don't actually take the trade unless all the conditions are met. So Sprint did go back up above the memory resistance. After that, if it had reversed back inside the memory resistance, we could have a low risk sideways box setup opportunity. But when it was posted, all the conditions were not fulfilled, so we wouldn't actually take the trade. Let's look at One last example from quiz. What trade would you anticipate in next 1 to 3 days in this chart, if any? So when the quiz was posted, the chart looked like this. Intentionally the symbol was not shared. Now let me walk through this and explain what would we anticipate. We may not again pull the trigger, but you can see that because we can anticipate a trade, we can enter a trade before others sometimes, because we can anticipate a trade. So in this case, I noticed that sometime in mid-November, price tried to go above the watermark high level, but came right back inside with a bear release. It did make a higher high, breakout high, but that was a fake breakout. Price came down, and at the right edge, it is approaching the last watermark high level with extreme high activity, a series of high activity bars. So I knew from the unambiguous checklist that if it had come back inside the high watermark level with a bear release, it will constitute a box short trade setup in a sideways market. All the conditions were met in the daily chart, so I could anticipate it but not pull the trigger. And how it played out is like this. One day later, it had a bear release. So if we applied the box setup now, short trade in a sideways market, we could see that our stop loss will be just above the high water mark. Profit target will be around this direction lines, white and yellow, which is also larger than the potential risk. So we could take the trade and book the swing trade profit in a sideways market in a few days time. So again, the quizzes are aimed at sharpening your skill and aimed at keeping all of us disciplined, following superior profit way and the Q charts, and aligning broad market, sector, industry information when we have availability of that. We have about 10 minutes to go, so let's try to apply superior profit way and try to find something in a top-down approach. In a top-down approach, we first look at market, country, sector, industry. So let's focus on US country. So we can look at S&P 500. We have done that already and concluded that it is sideways, but the internals are weak. So if it is so, and the market is at near all-time high, we probably will prefer to go short. Or if there is an industry that goes opposite to market, like gold, we might look for long opportunities in gold. I mentioned we already have a bullish outlook on gold itself. So we could look for gold mining industry for long trade, or we could look for other sector industries for short trade. Then we could create a list of stocks in that industry sector matching our outlook and then run sonar on it. If it is only a few stocks, we don't need to run sonar, just open them up with Q hop on template or at a glance, which combines the weekly and daily chart, and then see if we have any trade opportunity. Now the industry group ranking at our site is updated on a weekly basis. So we can see that as of last weekend, 20th Jan, there were 2 paper industry groups that were strong, but we are looking for bearish trade. So if we go to the bottom, we see renewable energy is weak for long time. So if it is already weak for so long, probably it has declined a lot. It may not be the optimal industry group to short it. We might look for something like airlines, but we have already traded something on that in airlines group, Delta and American Airlines, short by me and Nigel in Graduates Club. This ranking is as of last weekend, but we can use Zenith to look at the weakest and strongest industry groups as of today. Let me load up icon. icon is same as Metastock Zenith. Okay, I drank some water. I will demonstrate exactly how I use Zenith to do industry sector analysis in combination with the insight available in the heat map here, and do top-down approach to find potential trade. As I mentioned, S&P 500 is in sideways market. It will not be easy to find a trade, and that's okay. We will wait patiently. Now let me see how the industries are doing in last 5 days with real life data. So I have sorted all the 160 or so industry groups in descending order on last 5 days percentage change, and you can see in this week the top performing is US tires and medical equipment. Medical equipment is interesting to me because I am watching the hit rank of that for a while, and it was weak for many months, now starting to turn stronger. If you track this, you can not only swing trade successfully, you can pick some long-term investment ideas at almost the lowest price. Probably book some profit quickly and hold the rest for the long term. So how now do I find out the instruments in medical equipment industry group? We saw it is doing very well in last 5 days. Now we need to find the stocks belonging to this industry group. We have multiple ways of doing that. One is to use the industry app. So let me use it. And whichever country you are trading, using Zenith, you can find stocks. Let's use US market for now, but you could as well apply Japanese market if you are trading in Japan, or Indian market or London market for UK to find trade opportunities. So medical equipment, we have an industry group for that. So we can just click on that, and Zenith will provide us with the number of stocks. Now in this particular application, we don't have an ability to filter out the low liquidity stocks or those in a particular price range. In Superior Profit way, we don't like to trade penny stocks. So if I had used the equity search, I could do a similar filtering on healthcare services and equipment. On US market only, let's do only US market. Here, United States. Now let's try to find out stocks with average volume of at least 500,000 shares traded per day. Okay, for this particular search, we are not finding any data. So let me drop the volume search. And MDT, if you are tracking the commonly traded biomedical equipment stocks, you have heard about MDT, Medtronic. I have heard about it at least. So let's just open MDT with our Q charts. So we came from a broad market outlook that it is at all-time high but weak. Then we looked at what industry group was weak for a long time but maybe going up now. And medical equipment or healthcare may be one industry group that may move against the market because it is supposed to be a defensive sector. People will continue to use the medical equipments they are using. Supposed to be a defensive sector, just like consumer products, like Procter and Gamble, for example, or utility companies. So if a market does fall down, probably the defensive industry groups will do better. So we can look up MDT now using the at a glance template, and we can decide very quickly within 1 minute, sometimes in 10 seconds, whether there is a trade or not. On the left hand side is the weekly chart, and there is a lot of information on this simple chart, colorful chart. It came down heavily right after the bearish headwind signal came. It moved sideways for a while and then fell sharply. That's why we are always careful about holding on to long positions that has displayed a bearish headwind. We always tighten our stop. In this case, it fell heavily, breached the low watermark level, and came right back inside with a bull release. So we could actually take a sideways box long trade using the daily chart at that point in time. So if this is around the end of December, beginning of January, so probably this is the candle, the matching candle in daily chart, where price tries to go below the low water mark level, come right back inside with high activity. So it meets the requirement of box trade setup, and we could have taken the last long entry right at that point with stop below the recent low, target at the high or the upper boundary. Both have been reached. Now at the right side of the chart, if we look, actually yesterday and then again on this day, there was a bullish flow candle color, cyan, and this day looks good to me. It had a very low risk, just below recent low, which happened to be below the memory support also. So that stop level will be a good stop level. The entry price will be close of the day. If we are using real-time data, the target could be once the risk distance is covered or the upper boundary. So this could have been a potential long entry few days ago, and then there was another day, another cyan bullish flow color 1 day ago, but the profit potential would have been lower. At the right edge, right on the on today's chart, today market just closed, so right on the right edge we don't have a trade. But if you are a long-term investor, you might keep an eye, and probably you could get a very low risk entry for a long-term investment in MDT, which is in medical equipment industry, which was performing poorly as we saw, but starting to strengthen. Let's look at another industry group from our top-down analysis. Let's look at the bearish side. Interesting, coal. Actually, the week is ongoing, so but we can say as of today, the last 5 days, coal is the worst performer. That is interesting. Why? Because we are keeping an eye on all these industry groups every week. So if we search coal, where is my coal industry group? Here is the coal industry group, which was strong for a long time, 6 months, 5 months, 4 months, 3 months, then declined suddenly. This was a huge drop from rank 40 to 153, remained weak for another period, now started becoming bullish. But in the last 5 days, we see that it has dropped a lot. It's the worst performer in last 5 days. Worst performer. So that in one way says that some of the industry groups are up down, but it may also say that we can probably look for short opportunities in coal companies, which would probably be at very high price level. So that's a good point to short if we have proper setup. So let's quickly go to our search platform. I will search for coal industry group for USA market. and we come up with certain names. Some of them are probably well known to you. Let's look at Consol Energy, CNX. We are not spending time now to go to equity search and then filter out for low liquidity stocks. But let's just look at some well-known names, CNX, Consol Energy. So we have at a glance template already. Just type the symbol. Make sure that use chart as template, change all charts in layout, and then we will look at Consol Energy through at a glance. Interesting. It was, if you see in the left hand side weekly chart, it went up from a bottom. Very interesting. Where we had a bullish headwind signal. That low was broken, but price went right back inside in 2016. It was a fake downside breakout. So a long-term entry could be taken using daily chart as of that time, but then price went up a lot, moved sideways for a while. On this particular week, it gave us a fake upside breakout, tried to go up above the watermark level, came right back inside with a bear release, then went down a little bit, and now it broke the memory support line. However, it has a lower tail, and we can see the same pattern playing out in the daily chart. So if we notice when the watermark was broken, that will be at this level. High watermark is broken, price came back right inside it, and that level was around 20.8. This was around 20.8 or 20.6, around this level, when this magenta candle color came right inside, back inside the watermark level, 20 point something. So if we now look at the daily chart, because we can anticipate what is going to happen, I think this watermark level corresponded to the same watermark that we saw in weekly chart. So on this magenta candle, we see price came right back inside. There was no perfect trade setup, but we could keep an eye on the stock. And when the magenta color candle came, we had technically a lower high, and in a downtrend market stock, we could take a very low risk short entry with stop just above the recent high, target the lower boundary. That swing trade will close with profit in 2 days. Now, if we look at the right side of the market, it has fallen a lot in last 5 days, but there is no trade opportunity on the right side of the chart because it is already close to lower boundary, and also it has candles with lower tail, that is bullish. So if we were using this top-down analysis on a regular basis, we could catch the trades at the right time. Now looking at the Consol Energy, you can also see, though it is coming down, it went up, came down sharply, tried to go up, came down sharply. This says that this particular industry group is too violent right now for swing trading with peace of mind. So we may not trade it, but I demonstrated how, based on the industry analysis, you can do top-down analysis to find trade opportunities. You can probably look at airline stocks or some of the other stocks. You can use Zenith to get the data like I'm doing, or you can always fall back on the industry ranking. By the way, if you want, sometimes our traders don't want to look at the first 5 and 10 days. They want to rely on the monthly trend. If you want to do that, you can download the file, open it as a spreadsheet, and just sort it by the last 1 month performance. Enable editing. So now you will see, if we ignore the 5-day, 10-day performance, on a monthly basis, aluminum, it's continuing to be the top performer. Sometimes just sorting by monthly instead of last 5-10 days will avoid us being in a trade too early or being in an industry too early. So aluminum continues to be strong for the last 6 months. If we go down to the bottom now, farming fishing is actually continuing to be weak, but it is turning cyan. That is how we can try to anticipate and probably catch some trade at the very bottom, provided the Q charts give us an entry signal. We are also tracking renewable energy, First Solar, etc. solar companies. Those are languishing for a long time. If they tilt up, we'll have a good trading opportunity. We saw telecom was somewhat mid-range, then turning weak. That is why I was tracking Sprint. By the way, let me look at Sprint as of now. Remember, I had posted a quiz but couldn't take the trade because the signals were not confirmed. So when we see something interesting trend in the industry group, we can go back to the stock chart. And it's interesting again. In the weekly chart, we have a bearish headwind, but we have a lower candle, the lower tail. The week is not over yet. We'll see how it plays out. In the daily chart, it is resting right on top of the memory support line. And you can see today in live market, it tried to go down, came back up, closed right on top of the support line, memory line. This is how they work. The memory supports are very strong support. So tomorrow we have to see if it goes down. However, it is in short-term uptrend, so we are not going to apply go with flow technique. We'll see if another opportunity comes. Maybe not tomorrow. I am not anticipating it tomorrow looking at this chart. It may need some days before it gives us a downtrend condition, and then we can look for a go with flow short trade. So that is how we can apply top-down approach as well as bottom-up approach, where we start with sonar outcome and then look up industry sector data for that. We also look at fundamental data. I don't have time to do that today. It was not meant for this webinar. But we look at a number of information, including earnings, estimates, relative strength, etc., all in a very visual way. So this is actually an analysis of NetApp, which was in the quiz. We can see how the earnings and revenue, EPS and revenue, green is EPS and the gray color bar is revenue, is playing out quarter after quarter, and how the price is moving in response to that, along with the dividend D marked by D and important information. For example, this was NetApp expects to reduce worldwide headcount. So that was important brief that is imposed on the chart, and we can see price had a big gap down day after that. But it recovered, gave us a fake downside breakout from this level. So I am pretty sure if we look up the Q chart on 7th November, we will see a fake downside breakout with a stretch release. Let's do that before we close today's webinar. 7th November NetApp. Let's look at the daily chart. 7th November was around this day, 7th November. So interestingly, we can see it tried to go below the watermark level, below this gap day up, came right back inside. I cannot see the bull release because it is overwritten by the interesting headwind bullish signal. It's a trend reversing signal, totally different calculation from bull release. But if I go to the decision template, I'll be able to see that there was indeed a bull release signal. And again, when I go to the decision template, I see that it is also reversing back inside the quarterly and yearly pivot levels. So we have strong support from multiple points, from watermark level, from quarterly and yearly pivot. Price tried to go down with very high activity, came right back inside, gave us a headwind signal also. So we will be easily taking a long trade, which will be a sideways box long trade with low risk, stop below the recent low, and we will book profit along the way. So we could again use some fundamental data to find that. when this particular brief came in and we saw a gap down, it could have alerted us to see if there is a potential box trade up, and it did happen. That is how we also combine fundamental information in a visual way. That is superior profit way. We have put together everything that a profitable trader needs. We discussed mainly swing trading, but there are techniques for long-term investment as well as day trade. Very different, somewhat different. Day trade is very different, long-term investment somewhat different, but we have put everything together by combining indicators that are totally unambiguous, distinctly looking, easy to use based on color coding. We have divided the market into only 4 different conditions: trending, reversing, sideways, and exhausting. For each of those conditions, we have created only one trade setup. So it's a 3-step process. First, ask ourselves, what is the market condition? Second, ask, for that market condition, we have only one trade setup. Are the setup checklist conditions being met? If yes, third step, number 3 step, is just match up the overall market outlook, sector, industry, and sometimes even fundamental data, all in a visual way, to quickly decide within 1 minute whether to take a low risk, high probability trade. And we do all that while being disciplined. What helps in remaining disciplined is the trade log I shared in one of the last webinars, where we track not only P&L of the trades, but also the discipline with which we are following the trades. I can quickly open to show one more time one of the traders log for Singapore market using stock. So on the left hand side, the usual entry price, exit price that any typical trader tracks. But on the right hand side, we also track with what kind of discipline we are taking the trades, entering, exiting. There are 5 parameters: the signal quality, the sizing, the exact entry rules being followed or not, the initial profit taking or stop loss exit, and if we are letting profit run for remaining position, how are we remaining disciplined across these 5 parameters. Our target is to remain at least 80% or above for all of them. And you can see this trader is doing pretty well, not 100% on all the categories, but all we need is at least 80% in all the categories. So coming back to the presentation, what helps us in remaining disciplined is the trade log and also the sharing of trade ideas in community. We would not like to be seen as undisciplined trader, so sharing in traders community and sharing the chart exactly as it looked, the market information, sector, industry information exactly as it looked when we were thinking of the trade helps us in remaining disciplined. So that is the superior profit way, a way to trade profitably and consistently in global markets using multiple instruments: stock, future, option, forex, using different styles, long-term, swing trading, or day trading, by combining Q technical analysis with broad market, sector, industry analysis, and even fundamental analysis, all done in a visual way that is easy to follow and unambiguous. I hope you will take advantage of all the resources available at our website, hopefully be invited to our graduates club, and make superior profit way your way of trading. We are just beyond the scheduled time, so those are the things I plan to cover. With that, I will like to pass control back to Hunter. Thanks again to all of you for participating, and thanks to Hunter for organizing this webinar. Back to you, Hunter.
Thank you so much, Sagar. And you know, this is a unique opportunity for us as traders to really be part of a trading community. You know, one of the things that I really like about Sagar's system is, again, it is like a community. It's very visual, and you just don't find support or education all combined into kind of a community feel like Sagar's put together. So, you know, very lucky to have him, his system in Metastock, and you know, his continual willingness and you know, to come into these webinars and do special training. I'm sure we're going to do many, many more with them. Thank you very much for attending this session. It has been recorded, so I'll shoot it out to you once we're done rendering it, etc. Shoot you an email with, like I said, the recording of this presentation. Thank you very much, Sagar, for speaking this evening. Thank you very much, everyone who attended this. And please let us know if you have any questions. Definitely check out the Superior Profit website. You know, there's truly a lot of information there. So once again, thanks for everyone for attending. And if you have any questions, let us know. And as always, happy trading.